You all know Palantir 10x in the last few years. Meta grew more than 5 times within the last few years. Wall Street didn't discover these companies when they became famous. It ignored Palantir when it was under $10, while its government and commercial revenue was compounding. It dumped Meta when it was below $120, just before the profit margins and free cash flow turned around. In this video, we'll try to go back in time and figure out when these opportunities were a great buy and how we could have figured those out. Before we end, we'll conclude with Palantir's valuation, if it's undervalued or overvalued. Without wasting further time, let's get right into it. From 2020 to 2025, Palantir's revenue has 4x'd, whereas the stock has more than 10x'd. In 2023 beginning, it was less than $10. Palantir is a classic case where the company becomes expert in a niche, then expands. It had established its niche in the government sector. In 2022 and 2023, there was nothing wrong about Palantir. One, it was achieving profitability. It had turned around its margins. Second, it had established dominance in the government sector. There was also news that back in 2011, Osama bin Laden was captured with the help of this software by the US. Next was its commercial sector. You could already see commercial business revenue expanding. Once commercial growth was undeniable, profitability was achieved, there was nothing stopping back Palantir. They turned it around with the boot camps. The AI boot camp was a master strategy. Then what? Dan Ives took note of it, and Wall Street was backing it because its revenue is growing more than 30%, and now it's growing more than 50%. The lesson with Palantir is not you should buy it today. The lesson is that the best risk reward was when the business was clearly compounding and expanding beyond its niche, but the stock and the narrative and Wall Street hadn't caught up yet. Now let's move on to Meta. Meta is a different story. Its turnaround shows how fast sentiment can flip when a giant company fixes its core business and leans into its niche. In 2022, Meta looked broken. They were focusing on augmented reality. Revenue was slightly down and net income fell more than 40% versus the previous years. And investors were obsessed with metaverse losses. The narrative was this is a dying social network just burning cash. In 2023 came year of efficiency. Management cut around 20,000 jobs, removed unnecessary layers of management, and ruthlessly shut down low return projects. That turned around the business. The ad revenue returned to double-digit growth. The daily users kept on increasing and free cash flow bounced sharply. Meta leaned into its actual niche. By 2024, company was already delivering $164 billion in revenue, and their margins had gone back to 38%. Under the hood, this came from the core family of app businesses, Facebook, Instagram, WhatsApp, which carried more than $160 billion of 2024 revenue and most of the operating income. Meta just fixed its core by focusing on its key niche. That pushed its margins back up and stock price simply followed. So if you're a long-term investor, your edge is not beating Wall Street on short-term news. Your edge is spotting a company when it has already established its dominance in a niche and is expanding that niche in the numbers, higher segment growth, rising margins, better cash flow. That's the window Palantir and Meta gave. Let's try to evaluate Palantir. Its margin has gone from negative to a positive 36%. Its revenue grew more than 50% last year. Even if we assume it grows by 56% for the next 3 years with a margin of 40%, this will bring 2028 revenue to be around $17 billion with $6 billion as net income. If we have a PE of say 75, that brings the stock price to around $200. It's already 130, so that is 50% increase. But Palantir's PE is what is hard to predict, and its growth is what is hard to predict. I thought it couldn't outperform 40% or 50% growth last year, but it did 56%, so I was proven wrong. Its PE is right now 200, so the upside is still limited because most of the growth has already been priced in. Let's see in next few years. Hope you guys like the video. Please like, share, and subscribe. It gives me the motivation to pull up more videos like this. Thank you so much for watching.